WTI and Brent crude are now over $90. I think that's the close for today. And now European natural gas prices are now up 65% over the past week. And this article is from yesterday. U.S. Treasury could unveil measures on oil futures market as energy prices rise. It does not appear that that is happening right now. For whatever reason, they've paused that decision. The U.S. Treasury Department could announce measures to address rising energy prices, potentially including action in the oil futures market. Global oil prices have jumped since the war started on Saturday as the spreading conflict disrupts Middle East supplies. It could dampen speculation with traders knowing that the U.S. government is taking the opposite side, which should moderate the spike in prices, but it does not solve the disruption to the physical supply, which is significant with the closure of the Strait of Hormuz, and there is no spare capacity outside of the Gulf. Ultimately, if substantial oil volumes are kept off the market, financial manipulation is not going to work. Traders will continue betting on the oil price going higher because the price should be higher. This is different people that are being interviewed. Instead of using physical barrels to try to ease the market concerns, you can use futures to sell the front end of the curve and buy back the end. So this is something I think Scott Bessent would like to do and could do, but doesn't seem like he's being allowed to do that. The Treasury's traditional role focuses on fiscal policy, debt management, and occasional interventions in currency markets through mechanisms like the Exchange Stabilization Fund, but not in commodities like oil. And then Tony Sycamore of IG Market Analyst said that if they go ahead and try to influence futures contracts themselves, it might create short-term pause or spook some speculative longs, but I'd be surprised if it moves the needle meaningfully beyond a day or two. The oil market is deep, global, and driven by real supply and demand fundamentals, especially with tanker traffic already choked in the strait and trying to avoid the genuine threat of Iranian drone and other strikes. A bit of Treasury job owning or symbolic action is unlikely to unlock or change that. And then one other one, Ed Meyer. I'm not sure what they have in mind, but if they intend to sell futures to bring prices lower, this is a big gamble and will also be an unprecedented interference in the crude oil markets. I mean, we are kind of in a war. The question that comes immediately to mind is what happens if prices continue to move higher and go against a potential Treasury short position? Will they use the SPR to deliver against their short or just continue to post margin and ride out their position? So the SPR, I think I read, is at like 56%. It's low. It's still low. If you remember, the Biden administration had tapped it to keep gas prices down at the tank for several months. And then, you can't refill it if price is over a certain cost is over a certain percent, or I don't know exactly how it works, but they've only filled it maybe a little more than halfway from what I understand. So I don't know how much you can get away with that either. I think the hope still is that, you can squeeze the Iranians enough that they cave. I want to talk about HARG, but I'm going to stop here and I'm going to do that in another video.